Welcome to another edition of Inside the Economy. I'm Larry Howes. We're going to talk about the news and inflation and the outlook. The U.S. consumer, which is the singular most important piece of economic data probably in the entire globe, is what the U.S. consumer does. What's going on in the markets, and is there still any impact on trade and tariffs? Well, quick look at the numbers. Been a lot of drama in the media that inflation numbers were bad and it's back and it's because of tariffs. Well, none of that is true. Inflation is very undramatic, and all the interest rates basically across the whole yield curve are down. Job market is still fine at 4.2. Headline and core, they are cooling, slowly cooling. Tiny little uptick, but slowly cooling. All the drivers for inflation are also cooling. They're down. There is no momentum in trying to push inflation or suspect that things like tariffs and a few other things are going to drive inflation. It's very, very unlikely. Automobile dealers and manufacturers, well, they're down at 0% already. They're trying to get a little incentives. They're lowering prices to try and keep their spending and their inventory moving. That's not very inflationary. And neither is oil at $61 a barrel. The big driver here is on the wage and hour side of things, and in some of the salary side of things. The wage pushes and the cost of employees has cooled. There's nothing that's going to drive that without some sort of incident. The consumer looks pretty good. We're running about 70% of debt on mortgages. That's lower than it has been, but it's a good number. 68 to about 73 is a good number. The rest is sort of spread. The only mystery in here is what's going to happen with this student loan thing, which is a mystery to me at this point. Consumer looks good. This is disposable income as a percentage. It's down. It's working its way down. This is not stressed. I've mentioned before, this is not an overly indebted consumer. They have options. They're just kind of prudent. There are a lot of wagers in the bond market right now, futures in the bond market, speculation in the bond market. Gee, they're going to cut rates here in the middle of September. What are they going to cut? How much? Gee, how much by the end of the year? You know, there's sort of a bet going on whether we're going to get 50 basis points, half a percentage cut by the end of the year. Well, whether that happens or not really isn't important. It's sort of a gesture when it starts. Technically, cost of money is 4.5% right now. Okay, cut it to 4.25%. I don't think it's going to have a lot of impact on the consumers. They're not laden with debt anyway. They just have a few people going, oh, my home equity line of credit will go down. Okay, well, so will your interest. 25, quarter point, half a point, doesn't make any difference. If they do cut, well, it might lower the strength of the dollar, make the dollar a little cheaper, make international trade better from the U.S. perspective. And that's important now. It'll lower the cost of paying for all those treasuries out there that we've talked about. That's a line item. That's important. There are some things, but there aren't any markets now that are struggling or in a bubble that need help by cheaper money. It's just sort of a gesture. Not a pointless gesture, just a gesture. Some people believe, well, mortgage rates are going to go down, the real estate market's going to come back. Well, no. The real estate market, especially the single-family home market, is simply adjusting to back where it was. Mortgages, 6.5 this morning, might go down a teeny tiny bit, but it's not going to be a major change. When rates come down, generally it either supports prices or pushes prices up. What's happening in that marketplace, a huge factor in that marketplace in single family and some multifamily, are the investor and the institutional buyers. They are coming up to 30% of all the purchases. And you never know what deals they've done, what it's cost them. Was it all cash or was it private equity, so on and so forth. They move a lot of properties off the market. sometimes they put on. They are a big unknown at this point. But the home market is not falling apart. Even in a relatively bad market like Denver, it's just equalizing. And slightly cheaper money is not going to make it boom. Well, here's the equity markets. The S&P 500, we should all be pretty familiar with what happens when these markets like this do this. They've gotten a little ahead of themselves in anticipation that rates are going to go down. Yay. Granted, the S&P 500 has got good earnings. I wouldn't call them an earnings machine, but basically it's they make a lot of money. That number's been positive for a couple of years. That's supporting where we are. And the little drama of cheaper money is just going to give us a little bundle, and then we're just going to have to correct back down to earnings anyway. The political correctness of S&P announcements, talking about the earnings, what's doing in the business, investment guidance calls, they're kind of politically correct. But there are people that keep track of mentions of things and what is really down low in all of these mentions of what corporate America is thinking about. It's not recession. There's not a recession on the horizon. What we're looking at for third quarter GDP, we're probably in the 3s or the very high 2s for the third quarter. And the fourth quarter isn't going to be bad. We're going to start on a trend of lowering interest rates. So, no drama there. Finally, yes, the trade balance got us significantly better for a variety of reasons. The United States is exporting more all the time. Some of the new contracts with Europe for liquefied natural gas are huge. We're exporting more of this, more of that, services. And there's still stuff coming in, very important low-end stuff, but the shift in having more of it built here or created here or the technology developed here is a huge shift that's moving in that direction. So the trade balance will probably only get better if the dollar gets cheaper. So they asked me today, gee, you sure there isn't any drama out there anybody be interested in? There isn't any drama. So that's where we are still. As always, send questions along to info@SHJ Wealth Advisors, and I'm happy to deal with them. Thanks for joining me.